off. Americans return to space as Discovery clears the tower.
TTMTrades, welcome back to the end of week review. Today we're going to talk about where the account is at and how I took a 69% hit to my account this week. Boy, but it was a self-inflicted wound nonetheless. And just with that being said, something that you all can learn from. All right, my pain should be your lessons that you learn from on this small account challenge, on this journey to taking $500 and taking it all the way up to 100 grand before year end 2020. Okay, so again, self-inflicted wound. We're gonna jump right into this. Okay, my first trade for the week, as you can see here on the Discord, was some Facebook calls for 215. If you missed that video, the link should be right above in the corner. Watch that video. I already talked about that one this week. We pretty much took the Facebook 220 calls at $1.29 and sold them for $1.97. And then we also took the Facebook 215 calls that we bought in for $3 and we sold them for $4.45. So a little bit over 50% profit on both trades. Both of those trades together totaled, give or take, $710. So we made $710 on that. That brought the account up from where we started the week at $14.49 or $14.48. It brought the account up to a little over $2,200. So we was on a roll, all right. And with that being said, this is why I took the 69% hit. Okay, so once we got out of the those Facebook calls at the beginning of the week, making $710, the big thing was going into Wednesday. As you can see here, we saw that SPCE had just pulled back at key level support, $32, $34, and it was holding pretty well. So we was debating on if we should play Beyond or SPCE. Okay, and after all the debating and going back and forth in the chat room, we finally decided that we was going to play ticket BYND. All right, based off the daily setup, price action consolidating, looked like a good breakout around the corner. It finally broke above its 150 SMA, so the whole setup was beautiful on ticket BYND. So with that being said, we went ahead and bought to open some 134 calls on ticker BYND at 80 cents. Now, we sniped the entry perfect, all right, and we're going to review that in the chart here soon. But where I hurt myself is I have to remember that this is a small account, and I'm doing a small account challenge, all right? And I have to play by the PDT rules, the pattern day trader rules, okay? Where I can only make a certain amount of day trades within a 5-day rolling window, right? It's only 4-day trades within a 5-day trading period window. Mind you, I've already did that a couple times in this account when I first started, before we even started the small account challenge. Just trying new strategies with $1,000 to see how they work and so on and so forth. And that's why I end up bringing, that $1,000 down to $590, and now we're doing a small account challenge just to bring it back up, utilizing my trading strategies. Okay. Now, reason why I say this is a self-inflicted wound, because I bought those Beyond 134 calls at 80 cents. I bought them on Wednesday, right, with an expiration of Friday, right around the corner. Okay. So when I was treating it like a day trade, mind you, in my mind going into the trade, my plan was to get in and get out, right? Quick gains real quick. Get in and get out, right? That was the mind frame I was thinking going in. But once I got into the trade, I realized that I couldn't get in and then get out that same exact day because I would violate the PDT rule, okay? And E-Trade had already messaged me saying, be mindful of, how many trades I made, the PDT rule, so on and so forth. If I keep making day trades, my account could be further restricted, okay? And they can restrict your account for 90 days, okay? I've seen it happen before. So I don't want that to happen, all right? So with that being said, I bought call options on ticker BYND, 2 days of expiration. The theta was already high, -42. And if you don't know what theta is, when it comes to Greeks on options, that's how much money you lose per day theoretically. If nothing else changed, and theta tells you how much you would lose per day based on time decay. Okay, and the theta was already high. The theta was like -0.38. All right, so mind you, I'm already in for 80 cents a call, and per day based off theta, I'm gonna lose theoretically another 38 cents because the time decay is so close to Friday. On top of that, I bought in uh, right at the top of the swing and right before the market sold off the next day. So really hurt myself doing that. Okay. So nonetheless, we'll jump into the chart. Buy the open. I'm gonna show you the pain. Buy the open beyond 134 calls at 80 cent. That was Wednesday 11/23. Thursday, the following day, sell the close beyond 134 calls at 25 cent. Big lesson learned on this one. Fuck. Excuse my language for those of you who are watching this and are underage, okay? But yeah, 69% hit that my account. So my account literally went from $22 to $2,300, all the way back down to $727, like that, on this small account. Ugh, it was horrible. It was bad. Okay, so big lesson learned on that. I need to understand this isn't one of my main accounts that I'm trading on Fidelity or TTMTrades. This is a small account, and I have to treat it as such by following the PDT rule and also keeping in mind the expiration date on these options that I'm purchasing. Okay, so let's go ahead and jump right into the charts, and I'll show you what we was looking at when we sniped this entry. All right. On the daily, constantly testing that middle Bollinger Band, which is the yellow line, well, the middle Bollinger Band on the weekly chart, the 150 SMA, and it was constantly getting rejected, as we've been talking about the past 2 weeks as we've been playing ticker BYND. Okay, when we looked at the price action on Wednesday, we saw that at that time it had pushed above the 150 SMA as the bands were constricting, which shows a sign of a possible breakout to the upside. So what we wanted to do was, we knew it was kind of overextended. We just want to position ourselves for some quick gains on ticker BYND. So seeing that on the daily, bands constricting, still in positive territory, the bandwidth below average, we know a breakout is going to happen. We said, hey, let's go ahead and position ourselves. So we zoom into the 2-hour chart, and you see we got this nice uptrend going. Okay, Wednesday was the 19th. All right. So on the 18th, we see we get this little jump up right here with the pullback. We played this pullback right here, and we started riding it back up to the upside. So again, as you can see here, first thing on the 19th, big jump up like this, and then the price action, mind you, this is a 30-minute chart. The price action begins consolidating sideways. Soon we seen this bounce right here, that breakout. Once it hit that 1 standard deviation Bollinger Band, that is when we sniped our entry. And we'll zoom in on the 5-minute chart, as you can see here, the 19th again, which was Wednesday. Soon we seen this breakout right here, which is what you saw on the 30-minute chart. Here, that little breakout right here in the pullback, that's when we sniped our entry on the 5-minute chart. All right, so 5-minute chart, breakout, and then that's when we made our entry right here on that little breakout right here. So once it broke out like this out of that sideways consolidation on the 5-minute chart, we looked to see if the PMO still has some steam left. PMO still trending nice and strong above both its averages. Our side a little oversold but holding above 50. So we was gonna treat it like a day trade and scalp this play. All right, so immediately jumped in the 134 calls at 80 cent, and the price action continued to trend up. All right, 127 pushed up to 128, and then when it pushed up here to 129, I was up on the calls like 60%. So literally my account, I was up like $1,200 on those calls, and it was the perfect entry, perfect play. When I was getting ready to sell and cash out, I remembered the PDT rule, and I told myself, do not cash out, because you don't want to restrict your account for 90 days. You don't want E-Trade to further restrict your account, for you violating the PDT rule. Okay, so with that being said, I said, you know what, I'm gonna go ahead and hold. Maybe the 129, 128 level will hold. First thing tomorrow morning, I'm gonna cash out of my shares, take profit, and start looking at another play. All right, because what I noticed is, even though the price action pushed up into that 129, getting lower highs on the RSI, which is showing a what's the word I'm looking for? anyway, getting lower lows on the RSI, and then I started noticing the PMO was losing momentum. All right, so even though we got that push up to 129, the PMO didn't create a higher high as the price action did. So I knew those were all signs that the price action was going to drop. So continue holding. I'm up 60% on the calls. I said I'm going to hold until tomorrow. Literally, right when it hit that 129, it sold off like this all the way down. All the way down to this area, to that 123 to 124 area on the 19th prior to close Wednesday. So literally I went up being 60% on those 80-cent calls. So right at the close, my calls was worth 82 cents. So I think I was up like maybe $30 at that time now. So now I'm like, I'm kind of like awestruck because I already know tomorrow's going to be ugly because one, again, the theta is working against me, the time decay. All right, that's already 0.38 cent. So now I already know going into tomorrow, my options that were 80 cents are now going to be cut down by 38 cents theoretically per the theta. And then I'm watching the futures overnight, and that's selling off due to this coronavirus. So not only am I going to lose money on the theta and the time decay, the market's going to gap down on me first thing in the morning. And I already know this is going to happen. So I'm going to go to bed, I'm going to wake up, and I know I'm about to take a big hit to my account. I just don't know how big of a hit, okay? So first thing on the 20th, price action, gap down at that 123 sell-off, started reversing. All right, I think my calls were worth 41 cents at that time. I said, let me go ahead and, start cashing out. So I'm trying to input my order, and then it started hitting the 150. Me being hard-headed, I'm like, maybe that 150 will hold. Let's see if the 150 hold. If the 150 gets violated, I'll go ahead and cash out. And I should have cashed out because the PMO was already way below its averages, and it's not showing any signs of breaking back above its averages to trend to the upside, right? Because I've smoothed these the PMO all the way out to eliminate all noise, okay? Only thing the PMO gives me is trend strength. That is it. All these little small up and down movements, the PMO strictly ignores those, okay? So even though it's hitting that 150, constantly hitting it, the PMO's telling me, it's not going to reverse. I know it's not going to reverse. I said, well, I'm going to wait. All right. Soon it broke through the 150. I hurry up and sold. And I sold for 25 cents. Taking a 69% hit to my account. My account immediately dropped from 2,300 from starting off the week at 1440. Executing those Facebook calls for $720, running the account up to 2,200 to literally running right back down to 727. Taking a 69% hit on the account. One, from buying option contracts that expire in 2 days, knowing the theta is working against me, time decay. And two, trying to hit the play like a day trade, knowing I can't day trade in this account because it's below 25,000. Right? So learn from me on that. So, and then immediately beyond, continue selling off with the market. All right. So that's that play. Lesson learned: if you're gonna buy options, always give yourself 2 weeks minimum on those options. I always give myself 2 weeks minimum on all my options in my main account. Always. All right. So I don't know why in this small account I'm just being a little more risky and not thinking these plays through. But we're gonna get better next week because we're gonna hit this $100,000. Okay. But big lesson learned. All right. Next play was, hey, we took the hit, whatever, keep moving. You don't go into the next trading day with revenge trading, meaning you're gonna make all your money back, and you're just gonna fight against the market until you get your money back, because that would make you lose more money, right? So you go into the market clear-minded, clear-headed, and okay, hey, yesterday's yesterday. I took a hit. Let me focus on today. All right, so that day's over with. Going into tomorrow, all right, I'm starting to look at, market selling off. I always want to trade in the direction of the market. I never want to go against it. So again, futures are selling off overnight. I say, you know what I'm gonna do is I'm gonna go ahead and play some puts on a couple plays, and let's see what's working. All right, so next day, we go in on Thursday. We say, hey, let's see. Yesterday, hey, playing puts this morning, because we closed out. We opened the beyond position on Wednesday, closed out the position on Thursday, and then we opened up some puts on a Facebook on a Friday. Okay, so yeah, so right here, playing puts this morning. We said playing puts this morning. Facebook break below 213.50. It's heading down to 209. All right, so and that was at 7:37 before market open. So we already saw futures was selling off, and we knew that everything we was looking at was gapping down that morning, following the market. Okay, and Facebook follows the S&P 500 almost to a T, especially the tech sector. Okay, so we seen everything gapping down. We knew Facebook was gonna gap down with it. We knew a key level of support at that time was 213.50, and if that level was to fail, that it would retest that 209 to 210 area. Okay, so first thing at 9:29, I posted in the Discord before market open. I said, hey, if Facebook 213.50 as support, looking to take it down to 210 to 209. All right, and then first thing when the market opened at 9:34, notice that 213.50 was immediately violated. And then once we seen some buying coming back in to try to recoup that 213.50, I followed my PMO signal and I went ahead and bought puts at the top of that buying power to try to pull it back up. And then we rolled it all the way down to the 210. Okay, and as we posted, 213.50 was violated. Watch the next level at 211.50. So let's go to the charts for Facebook and take a quick look. Again, we started seeing the market sell off again once I entered those beyond calls on the 19th, and the market dropped down like this on me. I took some puts in my main account and rolled it down from 218 down to that 212 and sold. And then the following day, this is where we played that 213.50 area for a violation and routed down to 209 to 210, right where it began consolidating. So this is what we were looking at on the 20th of February, coming to Facebook. All right, we had already noticed that Facebook, had gapped down. It was finding that one standard deviation Bollinger Band as support. So we played calls on Facebook from 213 all the way up to 218, making some nice profit. That was a $710 play right there. And then we knew that Facebook was reversing due to the market sell-off. And so what we did was we just rolled it back down. So 20th of February right here, as you can see, 21 February, excuse me, right here, as you can see, market had closed right here on this wick. Soon on the 21st, when the market opened, it gapped down like this due to the futures selling off, and we was watching that 213.50 area. All right, so immediately gapped down. It sold off to the bottom right here, and then some buying power came back into play, pushing it back up to the top as if it was going to recover. Again, the PMO eliminates all that noise and was already trending down hard, so we knew it wasn't going to immediately recover. So that's when we immediately executed our Facebook puts at let me pull up my trading journal. Facebook puts at 212.50. We bought in at $2.30 for expiration of this coming Friday. All right, because we don't think the sell-off is going to be that long. It's probably going to be for about another couple of days, and then we'll get out of it. All right, so reason we were saying 212.50 is a key area is because when it gapped down, that's right where 150 period SMA was sitting at for the 30-minute chart. And at that time, the 150 period SMA and the 30-minute chart, remember, represents the higher time frame middle Bollinger Band. So you go to the 2-hour chart, that's where that 212.50 was lingering right in this area on that gap down. Okay, so we immediately got in. The price action continued trending downward. Okay, got up on those Facebook puts 115%. Again, I have to follow the PDT rule. Yes, I wanted to cash out at 115% because I'm starting to notice Facebook basing down in this area, sitting at 208, and some buying power is slightly coming in. Doesn't mean it's going to reverse. All right, I think the downtrend may continue and it's just consolidating a little bit. But again, by me continuing to hold for another day, time decay plays a factor into my puts, into my options that I bought. Okay, so even though I bought into this move on Friday, I couldn't close out the move because it'd be considered a day trade, so I have to wait until Monday to close out. Okay, so with that being said, was up 120% on those puts. Once Facebook dipped down to this area and started basing out, I think I went from being up 120% to only being up now up 97% on it. All right. So right now, those puts that I bought in at 230 are now sitting at 455. So I'm up about a 97% gain for $673. So I don't want to I don't want to add that into this week's trades because I haven't closed out the trade. Okay. And every good trader knows no profit is yours until you actually close the trade out. So that's just what we're sitting at right now. Okay. The key thing is I took a 69% hit on my account and almost blew that motherfucker up. I almost blew it up. All right. And that's just from me not acknowledging the PDT rule and me forgetting I'm on a small account. And 2, me buying call options with a 2-day to expiration date like I'm about to do a day trade. All right, now if I could have got in and out that same day without violating the PDT rule, I sniped the entry perfect and I'd have been happy. All right, but the simple fact that I have to follow the PDT rule, being under a $25,000 account, and I have to follow that and I have to hold until the following day, so it's not looked at as a day trade, killed me, and that's all piss poor planning on my side. So again, we'll keep that in mind going into next week. Literally everything I made over the course of a week, taking into account from 590 all the way up to 2200 in about a week time frame, I gave all that back to the market. Probably 80% of it, 70% of it, or 69% of it. My math, I don't know, I'm tripping. I gave about 69 to 70% of that back to the market. All right, so what we did was we took 12 steps forward and goddamn it, took 10 back. All right, so we want to avoid that. All right, that we want to avoid taking those big hits. And I know I said that in last week's video, and we was doing really good with risk management as far as this week go with our stop losses and everything like that. It's just that PDT rule and me buying options that expire in 2 days and not keeping the theta in mind on my time decay really hurt me. Okay, so 2 lessons learned this week. I hope you all are learning from my gains and also my losses. That's the whole point of these videos. But if you got any questions, man, leave a comment below. Please leave a comment below and tell me to get my shit together. Thumbs up this video if you learned something. Till next time, the Discord is below. Join it. I post all my plays. If you got some good plays you want to post, add value to the community, I definitely appreciate it. But till next time, we ain't gonna take another 69% hit on this goddamn small account. I'm gonna take it serious. All right, but till next time, TTMTrades. We on our way to 100 grand, starting off with $500. I'm out.
Houston, Tranquility Base here. The Eagle has landed.